Hello everybody. Another week has passed and what a week it's been. A roller coaster in the markets. It all started on Monday with President Trump announcing that he will postpone the imposition of new tariffs on Chinese imports. So we will delay these new tariffs until December. This was seen as a reprieve in trade tensions by the markets, and of course everybody went out and bought some stock. So all the indices going up, risk on, all the bulls are happy. But then Tuesday came, and what happened on Tuesday? It was a cocktail of negativity. So we've had very weak data emerging from China. Chinese industrial output is now at the lowest in the last 17 years, indicating clearly that this trade dispute with the US is having an impact in the Chinese economy, which is very bad news for the global economy. Shortly afterwards, we've also had data coming from Germany and bad news on GDP. So German GDP shrank 1% on the second quarter of 2019, quarter-on-quarter data, of course. And once again, bad news because this reduction in output from the German economy, it's mainly down to a reduction in exports. So once again, trade tensions can be felt there. And then came the big event of the week. What happened? It was the inversion of the yield curve. So 2-year treasuries now yield more income than 10-year treasuries. So this means that investors are now sacrificing return so that they can have safety. And normally such a scenario is seen as a precursor to a recession. Not an immediate recession, but within 1 to 2 years a recession normally happens, a global recession. Of course, it's still early days, it just happened, and typically this situation has to prolong itself a little bit more in time, normally for a few more weeks, so that it can be seen as a clear indication. But the smoke is in the air and there's no smoke without fire. Elsewhere, we've had a bad week for emerging markets. We've seen that in Argentina with the defeat of President Macri on a preliminary election. The chances that he will be ousted towards the end of the year are now much higher, and many analysts don't see it as a positive. They see it as a bad thing. Argentina is now, in the eyes of many, 40% likely to default on its debts in the next 5 years. And of course, massive impact on the Argentinian peso, down 20% on the day to the US dollar. And this had an effect of contagion on other EM assets, so ruble, real, etc., all down. Elsewhere, in the UK, an unusually quiet week in the UK. Everybody's on holiday. But there's still the inescapable Brexit, indecision, uncertainty lingering in the air. It seems that the latest development points at a group of MPs from both sides of the political spectrum trying to come together to stop a no-deal Brexit through a parliament vote. It's still not clear how much momentum this movement has, or how hopeful it is to achieve any result. But if we judge by the reaction of the markets, we can see that it's not very highly likely that they will succeed, because the pound remains at very low levels, about $1.20, and it had absolutely no impact whatsoever. Just to finalize with a roundup of what's going on elsewhere. So oil is down, and this is because of surprisingly high stocks in the US. Gold is up, hardly surprising after the debacle on Tuesday with equities tumbling down everywhere. Of course, people looked at gold as the refuge asset, as a safe haven asset, so comfortably above 1,500. This is all for this week, but expect very interesting developments in the days to come. See you soon.